test. You good?
Yeah, just make sure you're about an inch away from it.
An inch? Oh boy.
Yeah.
That close. Oh boy. Alrighty. Alrighty.
So you need a 3-minute and a 1-minute countdown?
Mm-hmm. Yeah.
Okay.
Yeah, 3 and 1. I'm good. Yep.
Okay.
Perfectly fine at that point then. Yep. I think that's a good angle. I don't know. Should I move it over behind you or is that good? I think sorry, we have all these things, but that's fine. Let me move it over here just a little bit, everybody. Let me see if it goes like this better. Is that better like that, Terry? Yeah. Let's see. What's up, everybody? Let's see if that's a little better angle down here in the dungeon. Yeah, there we go. That's cool. All right. Good to see everybody. Gives everybody a second to catch up and get involved, even though. So it's all good. All right. You can hear okay?
Yeah.
All righty. So, we ready? You ready there, Chief?
Let's roll.
All right. Hey, folks. Welcome back to your Frederick Real Estate Update. I am Darren Ahern, bringing you over 20 years experience in the Maryland and PA region. And I also have with me down here, we are in the dungeon at WFMD, Mr.
Terry Kernan.
Hey, buddy, how are you?
Great, how are you?
All right, everything's doing well over at the bank and the vault over there?
Everything's doing great. You know, I mean, this week and last week, and I talked about last week, but, you know, some of the fear, or a lot of the fear of the 3 banks that, you know, had issues, the fear that it's going to continue to roll through the banking industry, which caused a lot of turmoil and a lot of vulnerability, you know, people not locking and stuff, but a lot of that fear has subsided. So yeah, we're doing great over at the banks.
Good, good. How mortgage applications, that's the big indicator, of course, of like, I mean, we'll hit the numbers here in a minute, but I think I know the answer. But what's happening with mortgage applications? What are most people qualifying for and all that good stuff?
So applications are up, demand. So, you know, I've said in the past that when things happen, when we cross over certain numbers. So no matter what number you cross into. So when we were at 3% and it crossed over to 4%, you felt oh my gosh, it's 4%. Well, we ran through 4, 5, 6, and 7 so very quickly in the last several months that it really hadn't set in until people started looking at the payment and difference in payments and so forth. So what we saw was rates were, you know, really good in January, and then February, those jobs numbers came out, and boom, rates went up to over 7%. Applications stopped, you know, the demand slowed down tremendously. And then as we saw some of the numbers get better, jobs get in line, unemployment go up a little bit, we've seen that the rates come down, and so automatically demand goes up and people start applying. So things are busy. But we're also seeing that low demand, and we're going to talk about that in a second. But a lot of people are coming in, a lot of first-time home buyers, which is great.
Yeah, what would you say the percentage? I know before it was about 25 to 30% were first-time home buyers. Is that number going up a little bit? Are we seeing more activity there?
Yeah, it's more like 35% with us. Mm-hmm. Like over 1 in 3 are going to be first-time home buyers. We're starting to see, sadly, a few calls coming in where people have very low rates, but they have racked up debt over the last 2 years, and now they're in a position where they're like, I've got to pay off this debt. And I talked about that before, that the only refis we've been getting are basically spousal buyouts for divorces. You know, if the one thing that the pandemic did cause was a lot of divorces. And so what we're seeing is spousal buyouts in refis, but now we're starting to see where actually people are calling and saying, hey, I've got a lot of debt that I've ran up, you know, a job gap, you know, loss of income. We lived off of our credit cards. We've got to get rid of them. So a lot of the people that we're looking at we're putting them into 7-1 bank adjustable rates.
7-1 ARMs are the big thing now.
7-1 ARMs, we can do a cash out on those, and we can pay off debt, and it's going to save you, and it's going to still be a good rate. You know, it's going to be in the 6% range to get a cash out, which is very good, and it's going to give us 7 years to get the rates back down and back in line and get you back into a lower rate.
So remind everybody, if the rates go up or down with an ARM loan during that time frame, how does that affect everything how does that affect their payments and everything?
So if somebody gets into a 7-1R, 7 years it's fixed at whatever rate. So let's say today we're at 5.875. So let's say somebody locks in, let's just say 6% to make it simple.
Okay.
If rates go up to 9% in the next 3 years, 4 years, 5 years, 6 years, that's fine.
Yeah, because they're
Protected.
locked in at 6.
You're locked in
Okay.
at 6% for 7 years. You don't have to worry about that rate changing. And when it does change, it can either go up or down based on where the market is.
Yep.
But because we're so high right now, that there's a good chance that your adjustable in year 8 would go down. But that's not what people want to hear. They want to hear, when can I refinance into a 30-year fixed rate? When does it get low enough? And I keep telling them
when they can re-lock down.
Yes. So they can refinance 12 months from now when rates come back down. I think rates are going to come back down even farther 18 months from now. You're starting to see the effects of, inflation's getting a little lower, but all the experts are saying that they raised the rates too fast, and they're going to have to start lowering rates come the first of next year.
Okay. Real quick, Terry, you said a thing about people's debt loads and stuff. That's something I've always been concerned with, and as people, I need to realize, as real estate agents, we never know about your debt ratio. We don't know. We just know what you tell us that we're legally allowed to know about somebody's financial position to make sure that we are in line with submitting an offer to where they're not going to get in trouble and we're going to come back and go, uh-oh, you need to have more cash now, or this has to happen, or this has to happen to be able to purchase the property, and now you're in jeopardy of losing your deposit, and the seller's all mad and everything else, and it blows up in our face. So with that being said, the key thing is, what I've heard is there is more percentage, loan-to-value ratio percentage of debt loads, the DTIs, that people are having now versus, say, 2 years ago, you said. But what about even like in the last 5 or 10, or let's go back to 2008, 9, and 10. Is this like, would you say this could be the highest debt load families are carrying right now?
It's starting to, let me say this, it's moving upwards. Okay. And about a month ago, when my concerns first started showing, one of the things I talked about in January, so gosh, it's 2 months ago. One of the things I talked about in January was, as a country, credit card debt went up 19% in the year 2022. 19%. It went from $800 billion to almost $1 trillion in credit card debt across the country. Didn't go down, but where you saw it going down was in 2020, 2021. Why? A lot of people weren't spending money. A lot of people were confined. People were refinancing, taking money out, paying debt off. I know that I paid student loans off. I paid a lot of things off to get things under control, and I wasn't spending. But now people are out of the pandemic. People are back to spending. That is a scary, scary number. 20%, 19% more credit card debt on the consumers. That bumped up every person's credit card on average has $6,000 debt on it. Mm-hmm. So people like you and I that may have zero when we pay it off every month, think of the amount of people that have, $30,000 again on debt. Those are where I'm getting the phone calls. And that's what scares me, is that's a bad direction that we're going as a country is.
Yeah, debt load.
So the answer is yes.
It's getting scary.
This is one of the highest times. When we cross over that $1 trillion mark, that's going to be a huge number. But with the way things are and the way rates are, that number is approaching fast. And I believe that we're going to hit it in 2023 because there's not really an opportunity to cash out to pay things off. So yes, you're absolutely right. That's a big number.
And so the idea that, okay, here's what somebody asked me: what strategically within their debt ratios to be able to afford more? Now, obviously, we dealt with a lot of buyers here where they're like, wow, how do I afford more? Like, I'm only qualified for $300. There's nothing out there for sale. There's nothing out there I want for $300. How do I get to $325? Or how can I qualify for $350? Talk about, we know, or I've known, the car payment, the average car payment is nearly $600 a month, which is absolutely, to me, just insanity. I can't even fathom doing that, but that's just like takes my breath away, because I look at it as, holy cow, I'd rather put $600 a month in an investment and be a millionaire when I retire. But some people need to have a new car or a nicer car or whatever for reliability, and that's fine. But the payment, like whatever amount, how many months left? Is it 3 months or 6 months? If somebody owes less than like 6 months on car payments, that no longer affects their value ratios, or what number is that now?
Usually 10 months.
10 months now.
Yeah, so it's in between 6 months or 10 months. Okay?
And how? What do you mean? How's it between? Like what?
Well,
factors?
so like, and I haven't had to worry about it. So, and I could be wrong. So if you're out there, but one of them is 10 months for FHA and VA.
Okay.
Or conventional, and then the other one is going to be 6 months.
So it depends on the loan type that a buyer's getting, is what dictates how much time frame left that car payment no longer is included in their debt to value ratios.
Yes. So here are things that you can do, okay? One is, let's say you're 7 months out or 8 months out. Pay a couple car payments ahead. If you know you're going to be buying.
Ooh, yeah.
Pay a couple car payments ahead, right?
So they don't have to pay it all off. It's just
right.
Get to that line, if you will.
So if you owe $900 on your car, well, let's say you owe $2,000 or $3,000. Let's say $3,000 on your car, and your payment's $300. Right there, that's 10 months. So you say, well, got to be under that. I got to be under 6. So let's take a look. So we're going to pay 4 or 5 payments ahead. We're going to send in a lump sum and get that balance under to $900, $1,200, where it's 3 or 4 months left.
Yep.
And we don't have to count it. That's one thing to do to increase your buying power. Second thing that I'm doing a lot of is any loan that's not a first-time home buyer, I've been locking them in on our 7-1 adjustable rate program. One was buying a house in Florida, a second home, got a very good rate, but they're looking at lower payments, trying to get more qualifying power, so you can look at a 7-year adjustable. That's going to give you more buying power. Why does it give you more buying power? Because you basically have a lower payment, a substantially lower payment. So paying your credit cards down, but the days of, well, I'm going to go refinance my car, well, you're going to refi it into a 9 or 10%.
Yeah, right. Yeah.
It doesn't make sense to do. So let's strategically look at how we can get that not to count against you. Hey, I co-signed for my son. That's his car. It's $450 a month, but he makes the payment. Great. Show me 12 canceled checks. Then we don't have to count that. Okay? So that's a big thing. There are things that we can do, but every deal's different. We're going to evaluate every deal and try to squeeze the most out of it.
And that's why it brings me to the big thing, Terry. Listen, guys, buyers out there, please, because of the market, we're going to talk about the flow of the market real quick, and this is why it's important. Get your ducks in a row. Get with Terry, and the big thing is get pre-approved. We have buyers that are delaying. They're like, okay, I want to buy a house and everything, and then all of a sudden, it's like, did you do mortgage app? Do you get your pre-approval? Do you got a plan in place? I need to know what that looks like. Let's sit down and strategically get a plan in place. Well, no, I've been busy. What? And it takes how long? How long does it take to go online and fill out a full-blown application for pre-qualification?
Less than a half hour, unless you're me, where I can't type very fast.
So you get somebody else in. Right. What you do is you get a 5-year-old. You get the 5-year-old behind the computer.
Your kid to fill out the application.
And you get the kid to do it. You just tell them what numbers to plug in, make sure they're legal and they're legit and they're not being fraudulent. And you're going to have that puppy done in 10 minutes with a 5-year-old in the room.
Yeah, when I have to write a big email, I get anxiety because I'm like, this is going to take me all day.
Yeah, so that's good stuff. But that is important, guys. The reason why is because the worst thing we want to do is have a house come up that you love. And you're like, oh, this is it. With the low inventory, this is the one I've been waiting for. And then all of a sudden, guess what happens, Terry? I've had this happen recently. Okay, and then next thing I know, let's write an offer. Oh, I didn't do the loan app. The offers are due in 3 hours. Oh, no, I don't have time. I have to go to the baseball game. That's not going to work buying a house, boys and girls. You got to have your ducks in a row, okay?
Yeah, when you put an offer in on a house, I'm calling that listing agent, and
yes.
I'm going to be an advocate. And that makes a huge difference.
Oh,
And
I've
I
had deals
will tell
happen
you-
versus not
Oh,
because of you doing
absolutely. Absolutely. I've sat at settlement tables where the listing agent has said, hey,
that. Yep.
we're not here. You know, the only reason we're here is because Terry called me that night that you said.
Yeah, we've had those. And I'm going, hey, what about me, man? I thought I did a good job. And they're like, we don't even know who you are, Darren.
But I'm not going to make that call if you haven't filled out your loan.
Yeah, you can't, right? Ethically, you just can't do it because you don't know what could come up that would be legitimate to have to work on and deal with. It could be a number of things, and that's why it's so important to get a true snapshot. Terry, what is the number one reason why people can be a little reluctant to do a full-blown application online?
The number one thing that I hear is the credit is going to, if you pull my credit, it's going to hurt my credit. I had one other mortgage company pull my credit, and I've been told that not to let anybody pull my credit on a hard credit pull. That's
Scare tactic.
It's a great scare tactic. It's a wonderful scare tactic, but it does not hurt your credit to have it pulled. Here's where it hurts your credit. You've been shopping for a car. You go out and you see this big, huge truck, and you're like, God, I really like this truck. How am I going to afford this $60,000 truck? And they say, well, let us shop your credit, and we're going to get you the lowest rate. And they shop you with 15 people that all pull your credit.
Yep.
So now the computer's
Now it
saying,
goes down.
whoa, there's a problem here. Somebody is in trouble because they're applying for 15 different lines of credit when actually they're only applying for one. That the computer cannot
Differentiate.
Cannot tell that difference. So then the guy comes back to you and he says, okay, we got you the lowest possible rate. It's 6.5%. And you're like, well, what's the highest possible rate? And they're like, 6 3/4. It's like you ruin my credit.
Yeah, over a quarter
Over
percent.
a quarter percent.
Over a $20 a month payment.
Right. You're killing me.
And that's
So-
what they won't tell anybody out there. Now, that's another world we don't want to be in the car companies.
But the bottom line is
Yeah.
that the number one pushback that I get
It's credit. Yeah,
and
I
I've
get it
gotten
too.
this for the last 20 years since they came up with credit scores, is that my credit score is going to drop if you pull my credit report. And I went to another mortgage company and they pulled it. And the bottom line is 1 or 2 within 20, 30 days.
It's not gonna hurt you.
Make a difference. 15 in an afternoon.
That's going to be a problem.
That's a killer.
Yeah, that's like-
going to make a difference.
That's going to be big. All right, let's get into the numbers, folks. Here we go. Terry, thanks for sharing that. Make sure you get in touch with him at the end of the program. We have all our information on myself. We're ready to help you out. All right, here we go, Terry. Total actives, 242. That's the big number today.
Whoa.
Yeah, 242. Nothing. Well, we're still hovering right in that area. Resale's 113, and the average time is 50 days in the market. That came down just a tiny bit, and that's because the spring has sprung. Daffodils are out. I had a kid one time show properties. They said, yep, daffodils are out. Everybody's looking at homes. I said, I'll never forget that ever as a real estate agent. That's exactly it. We see that yellow stuff sticking out. It's time to buy a house. New construction, 129. This is the number we've been waiting on right here. 81 coming soon. 2 weeks ago, we were at 40.
Yeah, I was going to say that.
We
number
have
doubled.
doubled. I know what
That
it
is
is.
huge.
Sellers have realized the daffodils are out. It's starting to turn green.
Putting chum in the water.
That's it.
That's
It's
all
time to
coming
go.
through us. They're putting chum in the water. Let everybody get excited about
Let's go.
what's
Get
going to
going.
happen.
So this is no doubt the best week that we see typically in the real estate market. There is a thing that it's actually documents out of 52 weeks in the year, which week is the highest listings coming out in the market, and that would be coming up this week, by the way. No fooling
April
around,
1st.
by the way. Yes,
No
no
April
fooling
Fools.
around. That's because it's no fooling around now.
All right.
Pending on
That's
the contracts, 546, and it's been like that for a really long time. 546 pending on the contracts. The new homes 277, resale 319, and then let me get into this. Oh, sold 30 days 258, 25 days on the market for those. And here are the numbers. That's amazing. Resale homes selling was around 485 single family homes is about where we kind of got down to. And right now we're back up to 503. We just went back over 500. Somebody says, why is that? How in the world? I thought prices were declining. No, they're not. We're pretty flat as a whole. Overall, we're pretty flat. But what that just basically says is we're starting to see more bidding wars, a little bit higher than we were 3 months 6 months ago. By far, we're seeing a lot more bidding wars, which is pushing things above the ask price, which is taking the average, taking it higher. The one that doesn't do that as much, because it mostly is a set price, is a base price or brand new builds, and then everything from that becomes how much somebody uses as options for a new build. I have one coming up. We're settling in this month, in April now, on a brand new build. And, you know, the average we see is about $40,000 to $50,000 is what somebody picks in options when they buy a new home. So when they see that sign that says the homes are starting at $399,000, that's without a toilet in the powder room. That's without washers and dryers. That, oh, you want a countertop in your kitchen? Okay, we'll get you a counter.
Staircase?
Yeah, staircase.
Staircase,
Well,
that's a
not
big
quite
one.
the staircase, but that's coming.
We got the fire pole.
Yeah,
But,
feels like
if you want to upgrade to the
feels like
staircase.
Spirit Airlines. It's really cheap flight, but by the time you pay for your bag, and now I have to pay money for what seat I sit in, I have to pay for a drink, I have to pay if I say hi to the pilot. You know, the stewardess says hi. It's like the doctor coming around. You got to pay for that, and before you know it, it's up to the same price as everybody else. But the new ones, Terry, is $660,000, $800,000. So we are getting close to seeing a single-family brand new build in Frederick County almost hit $700,000. So the thing I was talking about at the break with you was the spread. $156,000 is the difference between the average resale and the average brand new build, which constitutes about a 20 to 25% difference. So that's what I've been saying forever. When somebody says I want to build a brand new house, how much more does it cost me to do so than a resale home? And I tell them, about 20 to 25% more. It's like buying a brand new car versus a used car. You're going to pay a good amount for that differential for the most part. Now, that hasn't been in the car business. We're not beating up on the car business, but that hasn't been the case so much more recently with used cars being pretty high too. But in the housing, that has been a really, really, really average number that just seems to not want to move even over almost a decade of time, and it's just kind of the flow of it. So any comments on that?
No, in what you're saying is there's low inventory on the resales, higher demand on the new builds. Okay, the one thing that we see is that once you get above 600 and above, the group of people that are buying there, the demographic there, is not as worried about rate and payment as they are value.
Yes.
Okay.
It's good.
So they're worried about, resale. They're worried about, neighborhoods. They're worried about this. They're worried about that. They're worried about quality more, and they understand that, hey, I'm going to be able to refi this in 2 years. That's not a big deal. So that's a more pickier when it comes to new homes. So that's why I think that your competition for resale above 600, where we've seen that as a big slowdown, it's not really slowing down in the new homes field because they want the quality and the newness.
Yeah, definitely.
Does that make
Yeah,
sense?
absolutely. All right, we got about 3 or 4 minutes left or so, 3 minutes on the program or so. Homeowner insurance, Terry, let's get into some meat on the bones here as far as what we're dealing with out there. I spoke about this a little bit. I just dealt with, again, homeowner insurance with a roof, okay? There's a lot of aspects to it, fireplaces, you name it. I look at everything, man. Now it's like dealing with where is it? How far is the fire department? What about this? What's the siding? The big one's how old's the roof? If that roof is 2 years or less average lifespan that it looks like or documented by a home inspector, there could be an issue. So check this out. I got a seller now. They want me to sell their home coming up. And, of course, that's one of the first things I do when I'm helping a buyer is find out how old's the roof because of this insurance issue thing now, more than ever. But I also do it for my sellers, and here's why. To evade this, but this is what was interesting to happen. I met with my seller, and could tell it's pretty used up and, is old. It's probably 20, 25 years. I thought, doesn't look like there's much left on it for my guys. Let me bring in a contract. Let me get it certified. They came in and said, yeah, there's less than 2 years there's about 3 to 4 years on the roof. I said, could you do me a favor for $100? Can you put that on paper for me? Why did I do that for my seller? 2 reasons. Because the insurance factor thing coming up, that could be because of a buyer. But the other thing is this. They said, oh, Darren, do we have to put a new roof on to sell our home? I said, no, not necessarily, but we don't want to have an insurance issue because they could come back and say you need to put a new roof on or we can't insure the property. I don't know if that's 100% across the board for all insurance companies. I'm fine if Connie Phillips, my insurance agent, or anybody else can help me with that. But I'll tell you what, this has been a problem. I'm seeing more and more of this stuff with issues with homeowner insurance and all that. So that's a big one. Floodplain we know is a big deal. If there's been past claims on the property, things like that, really big deal. We already talked about, I got more information, Terry, as we end up the program about downtown Frederick, the investment rentals. If you own an investment downtown property, if you don't know this yet, you better learn this really quick because it's coming fast and furious. Starting in January of this next year in 2024, we found out you are absolutely going to have to pay. It's $120 a year. They do 2 years of it. You have to pay $240 up front, 2 years, for your place to be potentially inspected. We found out that about 15% of all properties are going to be randomly inspected for health and safety concerns and things like that. And if you do not meet the codes and all that, then you're going to have to make adjustments to the condition of the property before you rent it out and all that stuff like that. So this is nothing to be afraid of. It's no big deal. It's just simple stuff that Montgomery County, they're following a lot of the Rockville codes, I think, and things and their methods of how they've done their investment stuff down there. But yes, you are absolutely going to have to register your investment properties in downtown Frederick to be able to be approved and be able to get the permit licensing and be able to rent it out and go through all that. And that is definitely going to be here before we know it. So they just came out with those final little more details. There could be more details forthcoming, but that's what we know as of right now. So, alrighty, folks. Well, I hope you guys have a great weekend out there. It's absolutely beautiful. And
first Saturday is in downtown Frederick.
Yeah, first Saturday coming up, so make sure you get down there. It's going to be a lot of fun. Weather's going to be nice and all that. So you guys take care. Thanks so much each and every week. Make sure you let us know what you want us to talk about because that's what we do all the time on your Frederick Real Estate Update. Take care now. Have a great weekend. Right.
All right.
There we go. Right on the
I
moment.
realized at the minute, I was like, he never actually told me what to count down to. Like, what, are we going to 26? Is it 25 minutes?
It's 25. Like, when I saw that, I already knew because of the...
That's why I blew